Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the 30th of June Bull versus Bear webinar. Steve Miley on the call for Trade Day. So welcome everyone. We're going to go through apologies. First of all, actually, I've got a few bits of housekeeping to do. First of all, apologies for a slight rate running here. I was just trying to get some information up and here on what's going on because we have the ECB announcement right about in 10 minutes time. So just waiting to see if we've got anything coming from that. So that's going to be on while we're on. So I was just prepping up some stuff for that. Then we got the press conference. I don't know if we're going to get. Well, we'll probably get something while we're on the policy statement in here. So we get that. That's in now 10 minutes time basically. So you can see in here we get the policy statement, interest rate decision. Well, no change expected on the interest rate decision, but the monetary policy statement is going to be interesting to see how they're dialing back on their quantitative easing, which we're expecting, and then also an indication of potentially the first rate hike that we're expecting probably in July. So I was just sorry, my apologies for the late running of that. I want to say in here regarding you guys are probably aware, possibly not obviously, but probably aware that we have been having some technical issues over the past week, really, for most of this week. It hasn't impacted significantly on you guys on the evaluation challenge. We're having some trouble with actually people signing up for new 14-day trials and actually signing up to the evaluation challenge. But for you guys already on that, I think you are okay. Apart from, I do know that there's problems with your dashboards, okay? And that's because some of the data that we have in-house at Trade Day has been not lost, but we don't have the full data there for the dashboards to fully update correctly, okay? Now, so your activity feeds and your dashboards might not be showing the right numbers. We do, however, have all that data, both our brokers, and we do have it stored. With Tradeovate, we do have the broker. With the broker, we have all the trades you've done, and we have all your data, like the number of days you trade, the successful days, profit days, etc., and all your P&L. That is all. We do have all of that. And we're going to be running cross checks. Now we're pretty much sure that all of the issues that we've been working on this week have been sorted, have been rectified. Okay, we'll know a lot more today on that. But by the end of day today, tonight's update, which is at 4:30 p.m. Central Time on Thursday, when we have to run the updates, your dashboards, we are hoping, should be all up to date. And we're going to then run cross checks and make sure that they are all correct. Okay, so apologies for that. Technical issues beyond our control. James has been working with our IT development team tirelessly to get this done through the night in here on many nights this week. So our apologies. We are doing our best, and stuff happens, right? I hope you guys appreciate that. And also thank you for all the support we've had from you guys. We have had a lot of positive feedback saying, don't worry about it. We know things happen, and we've done our best to rectify that. And hopefully we're just about there. So watch this space. And please do check on the forums. We'll be emailing you directly as well. Those guys are you on the evaluation challenge. We'll be making sure that keep an eye on the forums and the chat activity in the trading room, etc., in the members site, where you'll be able to see any updates as and when they come. So keep your eyes on those. Okay. Right. That all being said, now let's take a turn back to the market. So we do have the ECB. That's going to be the big focus. Now, I know you guys are probably thinking, I'm trading, US stock indices, or I'm trading gold or oil or treasuries or other commodities, and maybe not trading European markets and not thinking it's going to have too much of an impact on you. Well, what I will say is, this is the one of the biggest central banks in the world, pretty much up there with the Fed. Okay, they've been on a super dovish path, far more dovish than the Fed. They haven't hiked interest rates yet, and they're still doing their quantitative easing. So the withdrawal of that now is fully expected. So it's priced into the market. However, once we get the details, this can have an impact, certainly on currencies, certainly on the euro versus the dollar potentially. And then we're also looking for it to potentially impact European bond markets. And then that can have in turn a knock-on effect to impact into US bond markets, and also going to probably likely impact into European equity indices, the likes of the DAX and the CAC, which are the German and the French index, and if it impacts onto them significantly, it could pull the major US indices with it as well. So please do be aware and be watching what's going on, and I'll try and monitor it live. I've got this. So Live Skulk is our Live Skulk is the Skulk service that you guys have available to you. I'm not sure how many you use that or if you're even aware of it. It is there to click on in the trade day trading room. Okay, so if you go to the trading room page, you'll see the Skulk service. Click on the Skulk service. I can't go and show you where that is because if I do, I'm going to get all the feedback loop because the webinar is going to be playing on that page. But I'm going to monitor here because they'll probably, or almost certainly, they have this Skulk service as well. So you go to Live Skulk. They are at Live Skulk. Okay, and if you go there, you can follow. They're pretty good at updating this fairly quickly. Or you can use your own sources, but they're pretty good in here. Or you can listen live on the Skulk. So I'll be monitoring that. We'll come back to that in the next 5 minutes or so. So that's certainly a big focus today, or the main focus really today. We don't have anything, Bank of Canada stuff in here. Speakers probably not going to affect what you guys are looking at. Maybe overnight activity. This is after US markets close. In here we have CPI data, and once they reopen for the next session, we do have CPI data out of China. And critically, I'm just going to skip to tomorrow. Actually, we've got the big data of the week. We're getting US CPI. That's going to be the big focus. Has been the focus of all this week. It's probably the biggest piece of data we get on the calendar now on a monthly basis, bigger than the employment report. It's more important than the employment report. The CPI data more watched. Okay. Let's go through the economic and fundamentals that we've got. What's going on right here, right now? So ECB, they've got their front and center in Bloomberg's 5 things to start your day. It's all going to be about what they tend to do next. Okay, so we're going to be watching out for that. There's a load of articles on there. We'll just have a quick look at those. The announcement will be followed by a press conference. And then what we're looking for is the slides of the July hike. Maybe some information on that. We've got markets pricing at about 40% chance of a 50 basis point move next month. Okay, so it's going to be. Are we going to get any information of the size of a July rate hike in the press conference, and then in the statement, the announcement, which comes in now 3.5 minutes? We may or may not. We probably will get some information on the pulling back of these. So it's the end of the net asset purchases. Seen as a near certainty, paving way for the rate hike in July. So we're expecting that to be announced today, the end of the basically the quantitative easing. Okay, and what degree they're going to do that and how quickly they're going to do that. So that's going to be significant to watch. We may get that, some more information on that. We've literally got 3 minutes, so I'm going to jump to that shortly. Let's go through some of this other stuff though. So Jack Ma's Ant Group in here, the IPO of that could be revived, and the fact that China is considering bringing that back is then definitely a positive. That they're being the crackdown that we've seen on the tech industry as being dialed back. We've seen various things pointing to that, which is positive for stocks. However, we do have, which is not covered on here. Where are we near? So parts of Shanghai return to lockdown. Beijing district shuts entertainment venues. So this kind of zero COVID policy in here that is being run by China in here has had a little bit of a setback in here over the past 24 hours. Having had relatively positive news over the last 1 to 2 weeks with things reopening up, there have been so China's COVID gears flare up. Okay, so that's a little bit of a concern. But on the flip side in here, going back to 5 things, the tech sector benefiting in here from this potential resurrection of the IPO for Ant Group. The dollar continues to rally versus the yen. Obviously, the BOJ, the Bank of Japan, is still very, very, very dovish, not looking defending their super low interest rate policy. The Fed obviously continue to move along a more hawkish path, and that means that dollar yen, driven by interest rate differentials, widening interest rate differentials between the US and Japan, has seen dollar yen push higher, and now, the yen is close to a 24-year low. Dollar yen at a 24-year high. And that is a real risk. I think that levels. I've got it in the And today I think it's like 135. I can't remember, 135.50, something like that. It's around there. Just trying to find it here right now. Just bear with me a second. I can bring that up and let you know, because that could see, if we break through that level, that we could see a significant trigger if we break through that level in here. Let me just find that. Just you can't see me in the background. Can't see the background here. I'm just bringing up my charts in here. Where's that key level? Definitely around this in the 135s. Bear with me. Just getting there. Or reports. Just looking at my reports from yesterday because I earmarked it. It's the high. So where are I? Key level from January 22, 135.16. So 135.16 is the critical level for dollar yen. So we're still some ways away from that. About 1.5 points in here, but nevertheless 1.5 cents. But 135.16 is the critical upside level that I've got anyway. It's the January 2022 high. Okay, let's see if they've got it. Where they got it? No, they're not actually highlighting here. So that's why I've got it as the high anyway at that level there. So certainly watching out for that. And if we get a break there, then they could see a surge higher in dollar yen, and that could have then knock-on effects into other markets. So tech industry having a bad time. Intel Core dragged down chip stocks yesterday. However, and then Elon Musk is, what is he doing? Is he threatening to walk away from the Twitter deal? That's having an impact. But then overnight, we have had some positive news, and in here, what we're seeing at the moment is stocks are higher. Nasdaq's up about 0.5% in here at the moment, and if one of the drivers of that, so having in here, so European stocks slipped before the ECB, but US futures gained. So European stocks went lower in trading today, but US stocks futures are higher, and European stocks down. We mentioned the Shanghai district. Also, a little bit of concerns going into ECB, which is out now. I'll come back to that in a second. And there's that. Yen is a whisk away from sliding to the lowest level in about 24 years. Where they got the number on it? I don't think they have. Oh, they've got the lie there. Yeah, 135. Why are they not? Yeah, God, they're not labelling it. You would have thought if they're going to talk about it, they'd actually tell you what the number is, but they're not telling you what the number is. Okay, well, not the number they think it is anyway. It's debatable whether the data could be different for different providers in here, going back that far. Okay, but what I was going to say was in here, where are we? No, here, this one. So one of the reasons we're higher in the futures this morning is Tesla. So Tesla announced in here, pulling up with other growth stocks going higher in the futures market. Nasdaq leading the way higher this morning, and that is on the back of China's electric car sales, or just car sales in China. It sold just over 32,000 China-made vehicles last month, up from only just over 1,000 in April. Okay, so that is obviously a significant rise, and that has and also UBS upgraded Tesla stock to a buy and raised its profit estimates, and that has allowed stock high this in the pre-market. Tesla's up in the pre-market, and then also some of the other tech sector is being pulled higher. So Microsoft and Apple up as well on the back of that. Let's jump to the Twitter feed from Live School, see what we've got going on ECB. Get a refresh on that. I'm just looking now at what's going on. Just looking off screen here on the market. Well, actually, it's out. Euro versus dollar has not changed. Okay, so in here, ECB intends to hike rates by 25 basis points in July. There we go. So on this more dovish side, ECB may change. So no change in the current. Marginal lending, net purchases and APP to end July 1st. Okay, so they're ending the APP program, which is the pandemic program. So they're ending the quantitative easing from July the 1st, and they intend to hike rates by 25 basis points in July. So slightly on the more dovish side, but it's probably, given that there was a 40% chance for 50 basis point, it's pretty much bang on what the market was expecting. And because of that, I'm looking at euro dollar in here. Euro dollar is hardly moved in here, really. It's kind of been a bit spiky, spiked up to like 107.45, down to like just below 107. It's slightly lower, but I mean, if you actually look at it, it's kind of from where we were, we're down like 20 pips, okay, in euro dollar, which is kind of nothing, right? So we were trading like 107.20 pre the announcement, spiked up to like 107.5 and spiked down to like 106.90. But euro dollar has hardly moved. So that's a reflection. I'm just going to quickly jump on off screen in here, just to look at, see what the European equity indices have done with that in here. So the DAX initially spiked a bit higher and then is back to where it kind of was, maybe a slightly lower than where it was. So not much change, not much impact from the ECB. Okay, and there are a load of articles on all of that, but that's kind of sort of old news. We're going to be tuning in now to the press conference. That's not till well, my time. That's 1:30. So that's basically in 50 minutes, 50 minutes from now. What else do I have in here beside ECB stuff, which is now actually kind of out of date? So indices this morning, as I said previously, European stocks are slightly lower. This is partly to do with the close, though. Yesterday, US markets slightly weak on the close, so that wasn't picked up by the European exchanges. Remember, the European exchanges closing around the lunchtime-ish sort of time, or US time. So 5 o'clock in Europe is going to be early afternoon in the US. So it's not picking up the fact that the US indices were lower going into the close. So that's part of the reason why these were down, and obviously Asia was down as well. But then if we go and take a look at the US stock indices in here this morning, so having been down about 1% on the S&P yesterday, we've recouped some of those losses. With the Nasdaq up, well, actually all the indices up between 0.4 and 0.6% in here this morning. So they've recouped 0.5% of the losses, which were about 1% down yesterday. So so that's certainly a positive running into today. I think that's most of what I wanted to cover on the macro fundamentals in here. I don't think we really need to look at the Fed tool. There's really not much going on that. It's been pretty much nailed on for two 50 basis point hikes with a slight growing risk of a more aggressive hike here at the July meeting of maybe 75, and then if we go to here, still pretty much split, but looking for a 50 at the September meeting, but maybe only a 25, maybe a bigger hike. Let's go take a look at the charts. Going to kick off with the S&P. So yesterday, inside daily pattern, look, the actual candle in here almost matching the actual open to close, but just around the other way from the previous session. We did get back here on, so that's Tuesday. We get that hammer pattern, but hammer pattern in a range, not as important. Hammer pattern more important when you get it down here, like here at the bottom of a trend, or here. This has got a pseudo. We've got a hammer there, but then got pseudo hammer. You actually got, this is a so dragonfly doji. You get the dragonfly doji at the bottom in here, and another dragonfly doji kind of here, so to signal the turning points in more of a downtrend. But here sideways, but nevertheless it's a positive signal from a couple of days ago. And then you can see we gave up and then rebounded. We got about half of it back in here. Very much a coiling. So we're in this kind of triangle in here. And if I zoom in, I need to zoom out a little bit in here. I'm going to take off all this old analysis. But what I'm going to do is actually zoom out to like a 30-minute chart and just show this kind of coiling that we've got now. So we're in this kind of coiling. Yeah, so the market coiled like a spring, and when the spring releases, we can get a more aggressive move, which we often see after the market goes into a consolidation phase. So, here I'll be drawing, you got this kind of triangle pattern developing in here. I don't know why when I tick that as save as default, it never saves as default, but it never does. Quite frustrating. I will bring that up with the guys at Tradeovate. And then you've got, so that's the broader triangle, and then we've got the kind of the narrower triangle. You can narrow that in through here, right? You could argue it could be drawn off these peaks here. And you've got this sharper line at the bottom that comes up off the more recent couple of lows. Not so relevant, that one coming up off the bottom. This one at the top I think is very relevant. You could draw it here, or you could draw it through these lines here. There's another one here, we could draw it across here. And I'll zoom in on this so you can see a little bit better, guys. So you see that one there. I'll zoom in on that. there. So that's the whole big kind of consolidation, and it's important because it's at the top of this kind of big up move, and then so it's like a flag. So an elongated flag from this up move. Where would we see? Where do we normally see the breakout on the flag? Well, it's a continuation of this up move, so we'd expect it to move higher, and the flag flies at half mast. So then you would expect this whole move to replicate it to the upside. If I zoom out even further and see what that looks like, maybe go to like the hourly. Oh, it's frozen on me. One second, guys. Oh, there we go. So yeah, we've gone to the hourly here. So it's this whole move here replicated to the top side. If we go and look at what that looks like, that's taking us up. This move here replicated up here. So it's taking us all the way up here somewhere. That's the projection on the bigger picture up towards that 4,400, 4,450, somewhere up here. It's going to be that distance from the breakout up, replicated up to here. Okay. But just going back now, I'm going to go back and zoom into the 15 and see what we're looking at right here, right now. So again, there's the sell-off. So rebound back here on Tuesday, and then the step back in here Wednesday, and then the rebound. So you got higher highs, so that's a positive. The market kind of fading in here a little bit in here this morning. I've got no massive strong view. I mean, my bias is higher because of the underlying bigger trend, the fact that you've got higher highs, but you've also got lower lows in here. So, I mean, no strong, massive view, but I mean, hold a gun to my head. I'd rather be long, but would I like to be long here? No, I wouldn't, because you're kind of right in the mid-range. If you think there's the higher low, the range, okay, put the fib on that, of the actual, here's the range of the last week or so, right? There's the 50% line. Okay, you see that there's the 50% line. And where are we? We're bang on the 50%. So we're sitting right at mid-range, right, as the last week and a half trading. So, no massively strong view. Hold a gun to my head. I'm 55, 60% bullish, but I'm waiting for a trigger now. And you're probably not going to get that now, the ECB, unless we get something through the ECB now. It's just going to be price action. So waiting for the US equity cash market to open in 1.5 hours. Okay, and it's going to be a similar story in the Nasdaq on the daily. Look, even more paralyzed. Look at these bars in here. Look at the open to close. The last 4 sessions. Okay, so that's from last Friday. That's the payroll day, employment day. In here, the market just sideways. Actually, last 4 days is just this week. Sorry, there's the payroll day. So it's up on the Thursday, down on the Friday, payroll day, and then boom, 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 boom. Coiling. No surprises, coiling. Why? We've got what is probably the most important piece of data of the calendar year coming up in 24 hours tomorrow, right? So no surprise that the market's coiling. Again, if I step into the 15-minute, hold a gun to my head, I'm bullish in here, but again, we're in this bigger choppy range, right? But, more recently, push back higher, looks slightly positive in here to me. So, tentatively bullish, a bit more bullish. I think the chart looks a little bit more bullish on the Nasdaq than it does on the S&P, but obviously they're going to follow each other anyway. Let's go take a look at the commodities. I'll start with oil. Another new high today. We've stayed bullish on this. A little kind of hammer pattern yesterday, although in an uptrend, so not as relevant. But we did get the setback the day before. Big impulsive candlestick, another new high. Hardly a dip in here this morning. And if we step in, I've got this all the way in at 5 minutes. So I'm going to step out to in here 15. In here. So there's the impulsive move yesterday. Coiling back lower now. I think you've got a good opportunity in here with the counter trend line off the top. Through here, look, it's a good trend line, right? So if you draw it through here, you get the touches. It's kind of flirting with it. It's been flirting with it. Probably better to redraw it there off this one in here, and you can see really respecting it. And here, so up through the trend line, and then you may as well then wait for it to break that peak there. That peak there, 122.26, up through 122.26, expecting it up to the highs and higher. Okay, so and then you can have a really tight stop here if you want, or below the recent low. Okay, so there's a good risk reward set up there, but I'd be waiting for the break above. If it takes out the low, then there's another down leg in here. So I'm not sort of tied to the bullish view, but I think the market's clearly still in the uptrend. If we go to gold, paralyzed, sideways city in here, underlying positive theme, higher highs, higher high up here. So you got low, high, higher low, higher high, higher low. But now the market kind of indecisive, and look, just going nowhere the last 3-4 days. Stepping in to 15-minute chart, super sideways. No real strong view here. I mean, again, probably slightly bearish, actually. I've been more bullish on this more recently, but the very immediate risk, I say, is probably just to the downside. The price action, lower lows and lower highs, and then the market's sitting on this low here and just sitting above here. You can see multiple lows in this kind of 1848 to 1846 kind of area. Taking out that area would look for a move down to like maybe $10 lower down towards the low. So that's going to be the area to watch, I think. Looking for impulsive moves down through there, and we're getting a significant drop in here at the moment. So yeah, looking slightly negative in here for gold. All right, everyone, I'm going to wrap it up there. I'm going to wish you all a great trading day. Again, thank you for your patience during the last 3-4 days or last week in here with the issues that we've been having. Dashboards should reset this evening at close of business today at the end of the US session. So monitor your dashboards there. Hopefully everything will be in order. Otherwise, we'll make adjustments to those. And we are monitoring that. It is all under control. So don't worry about that, guys. I'm going to wish you all a great trading day, as I said. I'll be back with you with the CPI Bull versus Bear webinar tomorrow on TGI Friday. Until then, have a good one. Bye.